Doing good while doing well is a tough mark to hit, but my next guest is trying. He built a billion-dollar real estate business, ran a hedge fund for more than 2 decades, gave millions to charities, and saw his donations misused or wasted. He saw that philanthropy doesn't work, charity doesn't work, extra government spending doesn't work. So Bobby Turner is pairing profitability and purpose in a new hybrid called impact investing. The founder of Turner Impact Capital is with me now. Bobby, it is great to see you. Thank you for coming in.
Thank you for making it a chilly, cold morning in New York.
That's right. All right. Always happy to help the Californians. Now, you are a capitalist. You are also a philanthropist. But you have said over the years you have seen where combining those two disciplines could have a greater effect than doing either one on a single track. Why is that?
I like to think that I evolved in both. So for many years I was both a successful capitalist and philanthropist, but I struggled at both. As a capitalist, I created great wealth and always assumed that with that great wealth would come a satisfactory level of happiness. What I discovered in my life was that the only thing that wealth guaranteed me was a more comfortable form of misery. So with my wealth, I realized that I struggled at making meaning of my change. But as a philanthropist, I struggled at making meaningful change. We gave millions of dollars away for personal causes that were very near and dear to me and my family. And we realized that we were placing Band-Aids on issues, that we were being reactive, that we weren't creating sustainable and scalable solutions. So as a philanthropist, I struggled at making meaningful change. And I concluded a number of years ago that if you wanted to treat a problem in society, be it education, be it health care, be it affordable workforce housing, then the government and philanthropy were just fine. But there's hundreds of years of now anecdotal evidence that neither philanthropy nor the government are very good at tackling creating sustainable solutions that stick.
Well, we've seen even generosity from other people, yourself included, but Mark Zuckerberg famously gave $100 million to the educational purposes in Newark, New Jersey, and it was squandered. So how are tales like that and your own experiences cautionary tales for what you are not doing?
Well, I think that to be successful in tackling some of the daunting challenges, you obviously have to have a passion towards a mission, but you also have to be a responsible shareholder, not just a stakeholder. And when you give money to organizations that don't have a history of being held accountable for the impact that they're going to do, I think that's going to lead to problems. And I think that's what happened when you saw with Mark's investment into Newark. Again, if you want to treat a problem, philanthropy is fine. If you want to cure it, you have to harness market forces to create scalable, sustainable solutions. And I tell people that if you can address the mission and the issues that you're passionate about and make money at the same time, why is that a bad thing?
So when you say make money, how do you make money? If I want to invest in your fund, an impact investing fund, how do I do it?
We are a private equity REIT. So we are, in essence, a locked-up fund where investors give us money or commit to give us money over a period of 4 years, which we draw down the capital. We'll build a portfolio of schools, and by way of example, in our first Turner Agassi Charter School Fund, over a 5-year period, we have opened 50 schools. We have another 14 schools that will open in the 2016 school year. About 34,000 children's lives we have been able to change the trajectory of. At the same time, we've driven great risk-adjusted market rate returns for our investors.